Thank you again, Smriti ji, for an insightful session. Up next, I'm thrilled that we have with us Deedy Das, Principal at Menlo Ventures, where he leads early stage investments in AI and infra. He brings deep product and engineering experience from his time at Google and as a founding engineer at Glean, where he helped shape one of the fastest growing enterprise search startups. He's also the creator of the viral Deedy resume, which has helped thousands break into tech. And I don't know if many know this, but in a different kind of transformation, Deedy's personal journey of losing over 50 pounds has become a powerful example of discipline and balance, something many of us strive for in both work and life. And moderating this conversation is Shaista, one of the co-chairs of the India Business Conference. Round of applause for them.
Thanks everyone for being here, and thank you Deedy for coming. First off, I want to congratulate you and Menlo Ventures for leading the Good Fire's recent investment round. I know everybody here is super excited about the Anthropic Fund, and it's super exciting to see one of the first big bets come through. You've had such an incredible journey. You've worked with Google, Meta, you have scaled products in Clean, and now a principal at Menlo Ventures. But one thing that really struck me was that you went back to India for a little bit and then came back to USA. So just trying to unpack that a little bit, what led you to go back and then come back, and what have you learned about the differences in these two markets?
Yeah, I grew up between India and America. I was just asking you before we started chatting, I'm like, which accent do you want me to do? And I spent age 3 to 10 in America, went back to India for middle school, high school, and then came back here for college. Around 6-7 years into America, I thought, I don't actually know what the Indian experience looks like as an adult. So a part of it was just propelled by curiosity to know, like, hey, I don't know what living in a Bangalore or Delhi could look like. I don't know how you find a house. I don't know the first thing about it. And I'm a very, my friends know this about me, I'm a very Indian person. Like, I like Bollywood movies, I like Indian music. That's like how I spend most of my time. So I did want to give it a go and see whether this was a place where I could see myself long term. And that's why I went back, and it was a tremendous journey. I spent a year there, and I was at Google at the time. I was spinning up a couple of teams in search. It was funny because I was the 2019 World Cup, and we built, if you ever search for cricket or IPL or, I don't know, Kohli stats, all of that was stuff that we built out of the Google office there. And but eventually, I chose to come back. I'm happy to go into the reasons why, but I had a tremendous experience.
Thank you for sharing that. So after you came back, you did join Glean, and you actually helped build and scale one of their very core AI products. Wanted to get to know why you made that decision, what was attractive about it, and what were some of the biggest learnings that you got from there?
A mentor of mine at Google once told me something pretty interesting, which is, he said, Google has a lot of smart people, but it's like a place of parked Ferraris. There's a lot of smart people who, they all know they're not doing their life's work. My VP at Google would tell me himself, I would be like, Tal, he's an Israeli guy. I'm like, Tal, you're a smart guy. You know that these bets that we're all taking are, kind of like meh bets. These are incremental. They don't really change the future of knowledge, of search. Why are you doing them? And, behind closed doors, he would tell me, man, I have 3 mortgages to pay. Like, I'm not trying. The only way I lose my job is if I take a risk and it doesn't work. So I'm not trying to do that. So at Google, I realized even then, this is not the right place for a young person to be. Like, yeah, you can climb a corporate ladder, but you're never going to be able to do your life's best work. So I wanted to start a company at that point, but then somebody had put me in touch with Arvind, who was the founder of Clean, and I just realized, this is what I want to do. And the journey was exceptional. I mean, we went from 0 to $100 million in revenue in 3 years. It's a $5 billion company. We scaled super fast. We went from, when I joined, we were 5 people, pre-fundraising, no salary to really speak of. And now it's a 700-person company. There's a Bangalore office, there's an America office. And people often ask me, like, what was your role there? And I have to give them an answer, right? Like, you have to give them some title. But in effect, we did everything. Like, we rented U-Hauls to move stuff from office to office. We figured out what sales was. We hired the first sales guy. We flew across the country to wine and dine them, to be like, hey, can you work for a fourth of your salary? And so it was an incredible journey to see what you can do when there is no boss telling you what to do. The fundamental... All corporate jobs end up being zero-sum games at some scale because you're actually competing with somebody else for some promotion. At a startup is one of the few places where you know your equity is worth nothing. So unless everyone comes together to do something, and for us, we were working like 16-hour days because we were nobodies. We needed to be something, and I think that is a journey that I was compelled by, and that was sort of the sum of my experience at Glean.
That is quite incredible, and I'm pretty sure a lot of students here would resonate with that experience. So you've spent most of your career building, and now you're on the other side of the table where you're investing. Just curious to know what led to that shift, and what are some things that you really like about being in this space?
I never wanted to be in VC. That was never a thing that I wanted to do. I would frankly look down upon the people on the investing side, I guess the business school type graduates. And look, we're all Indian. You know what it is. Like, I grew up with my dad telling me, go to IIT, go to HPS for grad school, go to business school, become a corporate guy, go up the ladder, be a CEO somewhere. That's what everyone's dads probably tells them. And I just didn't resonate with parts of that. So I never really wanted to be in venture capital for the longest time. After my stint at Glean, what would happen is I wanted to start a company again. So I reached out to a bunch of our investors, your Sequoias, your Kleiners, all of these guys. And venture investors are a weird type. They're not as like suited and booted and stuff. They'll always tell you, yeah, let's get coffee. And you never know why they want coffee and what the purpose is. And so they all told me, yeah, let's get coffee. Great talking to you. We talk about ideas. And they'd be like, what about one more coffee? Why don't you meet a friend of mine? Like, he works with me. He has some good ideas. Get a coffee with him. And I went on all these coffee chats. And before I knew it, they were like, hey, would you consider a job in venture? And I'm like, I haven't. I didn't know that was a route I could even take. And that's when I sort of started to figure out, like, what does this involve? And then, long story short, in 3 months, I'd come around to understanding, like, it's not like we are capital constrained. It's not like there's too many VCs, if anything. But what I didn't see in the venture community was more faces like mine. But I don't know how many technical Indian VCs there are. And when I went to talk to any single VC, I felt like I was in an interview. I was like, okay, you guys went to business school, very formal, very like, what's your growth plan? What's your finance plan? I'm like, I don't want to talk about that. I want to talk about technology. That's what a startup is. We'll figure all of that out later. And I wanted to be on the other side for somebody like me to do the same exact thing. And that's why I kind of went into venture. And I've had, just a phenomenal experience. You talked about Goodfire earlier, and, Smriti earlier was talking about bias in AI, which is we funded these companies which basically has no revenue model yet. But the idea is there's this incredible group of researchers from your OpenAIs and your DeepMinds and your Anthropic who study the weights of models and based on their predictions can interpret how they actually work. This is one of the few teams in the world that can do that. When you do that, you can do that not just for LLMs. You can do that for biological foundation models, for DNA models that predict different sequences of drugs you can test, pesticides you can build, but you don't really know how they work. But with Goodfire, you kind of know what's going on under the hood and why certain sequences have phenotypes that they do. So anyway, long story short, I really enjoy being technical, dabbling in a lot of business ideas, and just being a voice on the other side who gets it. So I know Arvind is coming later today from Perplexity. He's a good friend of mine, and whenever we chat, he's like, I don't feel like I'm talking to a VC when I'm talking to you. I feel like I can just riff on ideas. You're not judging me. You understand what the business actually is. And I'm like, I appreciate that, Arvind. And so it's really fun to just be that other sounding board for these incredible entrepreneurs, and sort of take a back seat and just help them with their journey. That's kind of why I chose to do this.
Yeah, thank you for sharing that. In fact, my next question is very related to that. Now that there's a lot of funding happening in AI, especially in the early stage, there are some companies that have funding even before they have an MVP or traction. So how do you figure out the product market fit, and what signals do you look for? Do you think your past experience helps you make these judgments?
Absolutely. I mean, the reason when I was talking to all these venture firms, like there's a reason why I chose the one I chose, but almost every single firm was like, yes, we want to hire you. We want to hire more technical people because our 10 years of finance experience does not help us underwrite these companies at seed and Series A. What are we underwriting? They have no revenue, right? We're underwriting technology and team. We don't understand who's smart and who's not. We don't understand when we're getting played and when we're not. How do we know? This is just not our domain. And so that's where I come in, and that's what I help underwrite. But yeah, it's crazy town in venture. There's, I'll give you the high-level overview, but essentially what's happened is several venture firms have had tremendous returns over a 10, 20-year cycle. They've gone to their LPs and they've said, look at our great returns. Why don't you give us more money? And so LPs are like, great, here's some more money. And they've raised so much capital for these funds. Funds typically deploy on a 3-year cycle and return on a 7 to 10-year cycle. There's at least 5 funds I can name that have raised over $5 billion for their fund. If you've raised $5 billion for your fund, you have to deploy that capital. And what turns out to be true is the number of ideas that are worth funding is not the amount that has been raised. That's why everyone over-raises capital. I'll give you 2 examples. If a company in this market goes from 1 million ARR to 10 million ARR in a year, that company gets valued nothing less than $1 billion. That's very far-fetched for a public market valuation. Sometimes that'll go for $3 billion, sometimes it goes for $5 billion. That's insane. The reason they're doing that is because they have to deploy capital, so they underwrite that risk. But it goes even worse. Taking it a step back, last week itself, I had 3 pitches that were teams that had not built anything, that had not left their jobs, that said, I'm raising $100 million in capital, and they have term sheets. It's not like pie in the sky, I want to raise $100 million. They came from good labs, great backgrounds, extremely smart people. I am not. That's way beyond my risk tolerance too. I'm not trying to give $100 million to a seed company. But that's the idea. How can you underwrite a team and tech? What we look for the most, that most founders don't really understand, is the founder thinks we're looking for a pitch. What is my finances? What is my TAM? What is my differentiation, my moat, competition? I mean, yeah, that's what you put in the pitch. Great. But that's not what we're looking for. If you ever are privy to the discussions we have after, it's like, what was the vibe, though? That person, he didn't seem like he was energetic about it. He didn't seem... And the most common one is he seemed like someone who was grasping for an idea to be successful, not someone whose life was about bringing this idea into the world. And that's what we look for. And you don't find that in the pitch. You find that in the subtleties of the pitch. Like when you ask that question, what did they say first? Did they talk about the tech? Did they talk about the business? Those are the things that we actually look for. And I think if you ask the greatest sort of seed and Series A investors, I'll take one more last thing. I was talking to Doug Leone at Sequoia, who ran Sequoia for many, many years. He's probably the most legendary venture capitalist there is. 30-year career, absolutely amazing. And when I was talking to him, I'm like, Doug, I don't get it. Why don't you guys hire more technical people? It makes so much sense. And he looks at me and he says, look, man, I'm Italian and I'm a sales guy. And I've been doing this for 30 years and I think I'm pretty good at it. And I'm like, well, how? What's your secret? And he's like, dude, this is not a game of tech, really. It's a game of people. In 30 years, my first investment here, I think it was Cisco. He's like, I didn't know what the hell they did. I was evaluating the founder. I was like, does this guy or a girl run through walls? Will this person, when the back is against the wall, will they stay up and be able to make this business work? That's who I'm backing. And that stayed with me. So in the essence, that is, again, what you're looking for. What is the life story? What is their slope? And what are they really trying to do in the world? Those are the founders you want to back.
Thank you for being so candid about it. I'd like to shift gears a little bit and talk about the Indian startup ecosystem. So some of the data that I looked at, it says that in 2024 alone, AI startups in India have raised 20% more. But this brings us to this question about, are we really building deep tech AI startups, or are we just adding AI as a buzzword to consumer businesses? What's your take on this?
I think Smriti, you're somewhat right. Like I don't think India is at its place in the timeline of its history where it's ready to make bets on deep tech. It doesn't have the resources and the right ingredients to make that happen today. It could happen. I mean, it's a probabilistic thing, but think about what you're competing against, right? And the analogy I use is, no one was talking about investing into large language models before economic success in America. No one would do it. A VC would laugh you out of the room in India if you said, I'm going to raise $1 billion. What's my business? I don't know. I'm just going to train this thing. I'm going to buy a bunch of GPUs. We'll see. If you said that to an Indian VC, and I know they're some of my friends, they would be like, ha ha ha, good luck. That's not going to happen. So the culture, I think the conversation around this has shifted to a point where every time somebody else succeeds, we ask the question, why didn't we do that? But that's not the right conversation to be having. The conversation to be having is, when will you have the boldness to be able to take the bet before anybody else takes it? And I just don't think India's there yet. Obviously, it'll get there probably in our lifetimes. But you have to, and then last thing I'll say is, the ingredients in India are a little bit hard to find for several reasons, particularly with AI, and it's economic. I mean, the talent will just come here where they're paid a lot more. An average good AI engineer makes $1 million a year. I know friends personally who, we play cricket together, and very normal guys who are now worth $100 million because they worked at OpenAI for 6 years. It's bonkers. I don't know if we can cultivate that level of talent, because the talent pool is the same globally. The people working here are Indians, half of them, right? So it's for them, it's the choice of, I can go build this in Bangalore or Delhi where I'm going to get paid a whole lot less, or I can go build this here where I'm going to get paid $1 million a year. Their choice is somewhat obvious. So a lot of other problems have to be solved, I think, until we can get to the point of being at the pinnacle of innovation. China is a good example. China was never at the pinnacle of innovation until probably now, and they're having their moment. DeepSeek was that. They invested in stuff that even the American labs didn't want to invest in, and they proved them wrong. So I think it's a question of time. We'll get there.
A quick follow-up on that. No resources, as we are all aware, but this space is moving quite fast. China and US are making great progress. So what should India actually do to make the most of this time right now?
I think there are many other lower level problems in technology. At least in technology, probably the other stuff is out of my pay grade, but in technology that we haven't done yet. And there's a lot of opportunity way before this pinnacle of, I feel like if we're at the base of the pyramid or maybe in the middle, we're trying to skip through the top without doing the necessary steps along the way. America didn't get here overnight either. They made decades of other pretty important innovation. So there's a couple of things that I think India needs to do. I don't know how, some of these, but research, fundamental research needs to happen in India. It doesn't really. There is probably, I read research papers all the time. There's never a research paper for AI in India or anything really fundamental technologically that comes from India. That's one. Number two, risk appetite of capital has to be a lot more. I think that'll happen. That's an easier one. Number three is the economics have to look better for the people who are there. Whatever that means, I think we're seeing a semblance of that, but it's not so true when you're starting something new. It's still very hard for somebody who's making 60, 80 lakh working at a Flipkart or a scaled startup to go do a company. And the last one, probably the most important one, is you need a culture of innovation. And that is just very hard to find, even in America. San Francisco, for example, the Bay Area is such a beautiful place where I've had friends tell me, we often like to say, oh, can you really palate the risk of doing a startup or starting a company right now? And a lot of my friends would come and tell me, can you palate the risk of working at Google for 4 years? And you look at him and you're like, what do you mean? He's like, that's the biggest waste of time you could possibly ever do. What are you talking about? Like, it's 4 years of your prime that you choose to work for a corporate where your promotions, your income, everything is capped, your learning is capped. Do you choose to do that? There's very few places in the world that can have that mindset. It comes with, it's a zeroth world problem to have that mindset. So that has to happen to really foster the culture of innovation. Bay Area converts people who weren't even going to be entrepreneurs to being an entrepreneur. There's some baseline that will always be, no matter what. This is what you need, I think, to really catalyze innovation.
Thanks for sharing that. You've spoken about the bubble in private market in India and the power imbalance between the VCs and the startups in India. With capital coming in early and expectations rising, what do you think needs to change to improve this dynamic? Do you have any perspective?
Well, private markets are pretty screwed everywhere. They're bad here. They're bad at India. That's global. When it comes to the power imbalance and how to shape that, I mean, look, VCs in America all know this, where almost every deal that we look at that is good is a consensus deal. 90% of people want to invest in that deal. So half of the time you're chasing the founder and not vice versa. Reputational risk is also way higher, typically in America, where if you have one bad experience, other founders will know and not take your money, and they'll have many options. So it's really a market balance thing. In India, it's not there. We have so many people, so many ideas, and there's much more constrained set of places that capital is going to come from. And so those guys kind of call the shots. And so they're like, yeah, I don't want to take this pitch. I don't want to take this meeting. I will see. If you get a term sheet, maybe I'll pay attention. And you will have to pay attention as an entrepreneur. So really, it's a question of once you show returns, once you build companies that are successful, you exit them, there's more opportunity, there's more venture capital pours into the system, then there will be a time where there will be so much good entrepreneurship and capital will be chasing the entrepreneurs, and that's when the power balance shifts. So I think it's a matter of, again, time and actually producing those exits and those returns.
You talked about exits, the right time. So in India, as you might be aware, only a handful of startups like Zomato, Nykaa or Paytm have had IPOs. And even the ones that had IPOs saw a very mixed review post-IPO. Acquisitions are much rarer compared to US and China. So with both IPO and M&A exits still very limited, what do you think are realistic options of liquidity for Indian startups to have? And how do you think investors and startup entrepreneurs should think through all of these things before they start or early on in their journey?
Well, exits in America are pretty bad too. There are a lot of overvalued companies post-2021 financing that are never going to make it. And that's probably the game of venture capital at the end of the day. By design, not everyone's going to make it. At the same time, I think the US has a lot more of a healthier M&A system. And then there's subtleties like secondaries and things that happen more in the US that make it easier for the entrepreneur to get liquidity or get money even when the company is not fully scaled. So in the Indian IPO markets, actually, I think are better than America because a lot of those companies at least could IPO in India. I don't think they could IPO in the US markets. Even though they didn't, I haven't been tracking, but they didn't do, you said they don't do so well, but there are so many companies who, in my opinion, have way better financials and they can't even dream of IPOing here. So that's one good thing in India. There is at least retail interest in investing. I think generally the right thing to do for founders is give them liquidity on the journey, have a more lucrative M&A market and have the connections between the buyers here and people in India. Because there is clearly, I see it all the time, there's clear interest in buyers here. They just don't know what they're doing in India. There's clear interest in India to sell. They just don't know who to talk to. And that's just a connection that has to be made. Because these guys are I'm not going to hire a team of 100, 300K a year devs in America. I can't afford that. So sometimes I have to go to India where there is talent at a little bit of a cheaper cost. There are teams that are working on fantastic products that want to sell sell. They just don't know that they exist. There's no clearing market for M&A between the countries. Those are the few things that would change in order for liquidity to get better.
Thank you for sharing that. I know that a lot of people in the audience are curious to ask their questions, so I'm just going to open up the space for people to ask questions now.
Sure. You can choose anybody. I don't know.
You don't have a preference?
Hello.
Okay.
Hey, great to meet you. I'm a huge fan of your tweets and your posts. So I'm an AI guy. I have no knowledge about economics, so please excuse me if my question is stupid. But how do you see the Jevons paradox playing out in this era, given that efficiency in the AI models will result in labor displacements? So wouldn't that mean that there'll be less consumption? So is that a circular thing, or how does that?
Right, so let me explain Jevons paradox to everybody. So the idea is, right now we spend a certain amount on inference cost on all of the AI. Inference cost typically comes down over time with hardware and technology, and the actual GPUs usually get cheaper over time. All hardware gets cheaper over time. That's just been a secular trend across technology. Jevons paradox says, as that happens, the demand for AI actually increases so much that the net spend is greater. My view on it is, the GPUs getting cheaper over time, that's going to happen. NVIDIA has a monopoly right now, but Google's going to compete. There are a couple of other people that are going to compete. Hardware cycles are long, so it takes some time for people to catch up on different kinds of hardware. But at some point, compute for AI is going to get way, way cheaper. That's probably going to happen. Now, the question is, does demand increase at such a rate that it eclipses that decline, that the net is good? And I think, absolutely. I mean, partially because I have to believe that, if this is what I do. But also, there are pretty clear examples of this. I mean, and I think the best one is perhaps Manus. So Manus is this app that went viral out of China. It is, I don't know what people want to call it, but it's an agent that does a bunch of things for you with the computer, with AI. So you can say, hey, go research a trip to Japan, and I want to propose to my wife, and here's what I want to do, and here's when I want to go, and here's where I'm flying for. It'll take 20 minutes, and it'll give you an entire itinerary, and then you can go and change it, and you can ask whatever. So that's the product. It can do much, much more than just travel itineraries. It can do any task. When we spoke to the Manus team, they said that per request, their costs were 1,000x a normal model. They were using other models under the hood, but that's kind of the future that we're headed to. So there's the data shows that the demand is going to way eclipse the decline in compute. That's one. We look at other inference providers and their spend, be it Fireworks or Together, or even the big hyperscaler clouds, Google, Amazon. Their spend is going up and to the right. Their AI guys, my friends at Google are dude, even I don't sleep on Saturdays anymore because I have to stay up and fight fires because I'm on Gemini. So there is clearly a trend that there's more and more demand for these things. And so I do believe that Jevons paradox will play out. The question's really in the nuances. To what extent, in what time horizon, and for how long? And for those, that's a longer conversation. I'll let you guys just pick somebody and give it. Or if you have a mic.
Yeah. Hey, Deedy. Love your work. I'm Sanchit, founder of Namaste Global. I started this as an initiative bridging India and US. And this initiative is picking up so fast that I'm not able to control. And I've done the hardest work growing it from 0 to 1 by myself. I even went back to India, but eventually had to come back here. So now the wings, it's growing by itself because the Indian diaspora is increasing. I believe that it has to be blessed by someone senior. Of course, it can be investors who have been into the same field. However, I don't come from the investor background. I come from a complete sales background last 20 years. This is what I'm trying to put into this initiative. So as a really a newcomer into this fundraising and stuff, and that's a task for me. I can do sales whole day. So how should I initiate or start?
I think the right way to think about it is It's not just probably for fundraising, this is probably applies to other things, but really put yourself in what is the investor looking for and then deliver that. What are the investors looking for? As a venture investor, the way our fund is modeled is we will only invest in things where we see line of sight to a 100x or so outcome, because most of the things we invest in will fail. One or two outlier returns will drive our fund returns. What does that mean for how we look at companies? We kind of only look at companies where we believe that the TAM is big enough, the technology is good, there's 80% gross margin, software businesses. I mean, there's obviously exceptions, there's deep tech, all this other stuff, but that's kind of the bread and butter of what an investor is looking for their investment to be worth it. Then on top of that, there's like, what does a good team look like? What kind of, how can you show that you are able to accomplish that? If you can do those two things, then I think over time, I mean, you could be appealing to investors. I don't know what your company does, so it's really hard for me to say without knowing that. But I would just say, put yourself in the shoes of an investor. Figure out who the right investor is. It might not be a VC, right? It might be a private equity shop. It depends. It sounds like, I don't know, but it sounds like it's probably better play for PE. And then the sort of tactical game is, this is unfortunate, but warm intros, you have to go through a warm intro, get in touch with somebody who can vouch for you, and then get a conversation in, and then go through there, ask for other referrals. That's kind of how most of fundraising processes work today.
Thank you.
So building on your last answer, as you said, VCs look into funding companies that can get back 100x. So as a social entrepreneur, when I want to build a product that helps somebody, and then more than the returns, it's about the impact to be created, how to go about seeking funding? Will VC ever be interested in such kind of companies, or there has to be some other way around that we have to raise funding for?
I mean, it's tough. I wish I knew. I mean, look, we invest to make returns at the end of the day, so unless you see a line of sight to how that return profile can come, whether it's social entrepreneurship or not, it's really, again, you have to see a line of sight to that return for us to be comfortable making an investment. So there are probably other funding avenues for social entrepreneurship. And maybe my philosophical belief is to have any sort of impact at scale, you need to actually have a profitable business, but that's probably a separate discussion. The other way to think about it is, okay, the hardest part for you to fundraise is when you don't have a business. Eventually, numbers talk. So if you can show numbers, you can show revenue, you can show gross margin, if everything's looking good, scale is great, and you can make a case that you can be a hyperscaler business, then it will be appealing to venture.
All right, thank you.
Hi, I know that Menlo also invests in healthcare and biopharma and health tech. So what kind of gaps and opportunities do you see in upcoming startups that they could look forward to? And what are your thoughts on that?
I'm not a healthcare expert, but I can tell you that we do. And the biggest new trend that we're seeing is, there's a great essay by Rich Sutton called The Bitter Lesson, which essentially says, over time, the only way intelligence gets better really is by throwing more compute and search at the problem. We've gotten to a point where there's so much compute that intelligence, for obviously ChatGPT type stuff, but intelligence at large has gotten way beyond human comprehension. And the next sort of frontier, and the meaning of that for biology, is you can predict sort of chemical compounds, DNA sequences, a bunch of pretty interesting things in the pharma realm that then go and accelerate the R&D process significantly because it constrains the search space a lot. So you can kind of say, and I'm going to botch this because I'm not a healthcare investor, but you can look for certain traits of compounds you're trying to develop, wet lab test them, and then run a cycle, and hopefully if your model is really good from the data that you've given it, you are able to converge into exactly the kind of compounds that you're trying to build, whether it's I've heard pesticides, I've heard obviously drugs and pharma stuff, things like that. I've heard DNA foundational models for actual CRISPR-type techniques.
Yeah.
We're in a company called Zyra that does stuff like that. Vilya, chai discovery, bunch of these sort of foundational models for drug discovery are where I see a lot of the investment effort going into.
Okay, sounds good. Thank you.
Yeah.
Thank you. Thanks, everyone.
All right.
Deedy.
Thanks.